Bitcoin isn't just a cryptocurrency. It's the beginning of a financial revolution. Born out of crisis, it promised a world without banks, without borders, and without middlemen. A world where money belongs to the people, not to governments or corporations. This is the story of Bitcoin. From a mysterious white paper in 2008 to a trillion-dollar digital asset that reshaped the global economy. This is 360 Finance Plus. Make sure to like and subscribe for more insights and perspectives in the world of finance and the culture surrounding it. The year was 2008. The global economy was collapsing. Banks failed. Governments bailed them out. Trust in money itself was shattered. Then, out of nowhere, a paper appeared online. It was titled Bitcoin, a peer-to-peer electronic cash system. The author called themselves Satoshi Nakamoto. No one knew who they were, or even if it was one person. In just 9 pages, Satoshi described a new kind of money. No banks. No middlemen. No central control. The system used something new. The blockchain. A public ledger where anyone could verify transactions. It relied on proof of work, where computers solved puzzles to secure the network. And it was decentralized, meaning no one could shut it down. On January 3rd, 2009, the first Bitcoin block, the Genesis block, was mined. Hidden inside was a message. The time 03, Jan 2009, Chancellor on brink of second bailout for banks. It wasn't just data. It was a protest. Bitcoin had been born as an answer to broken finance. At first, Bitcoin had no value. It was an experiment shared by coders and cryptographers. People mined it on laptops. There were no exchanges. No price. Just curiosity. But slowly, a community began to form. Hal Finney, Gavin Andresen, Laszlo Hanyecz, early believers who helped test and refine the code. Then, in May 2010, Bitcoin made history. Laszlo traded 10,000 Bitcoin for 2 pizzas. It was the first real-world purchase. And years later, that same amount would be worth hundreds of millions. By 2011, 1 Bitcoin equaled $1. New exchanges like Mt. Gox made trading possible. The experiment was turning into a market. But with growth came risk. Hacks. Scams. Wild price swing. Bitcoin was fragile, yet unstoppable.
Look at me. Yes. You look adorable.
By 2012, Bitcoin was evolving fast. No longer a secret project, it was a movement.
Kind of kept bubbling.
The online black market Silk Road used Bitcoin for anonymous transactions.
What are you at now?
It gave the coin a dark reputation, but also global attention. When Silk Road was shut down, many expected Bitcoin to die. Instead, it grew stronger. Investors like the Winklevoss twins called it digital gold. Startups launched. Venture capital poured in. In 2013, Bitcoin crossed $1,000 for the first time. Headlines called it the future of money. But success brought chaos. In 2014, Mt. Gox, then the largest exchange, was hacked. 700,000 coins vanished. Confidence collapsed. Yet, Bitcoin survived. Its network was global. Its code was open. No single failure could kill it. Developers rebuilt. The idea of decentralized money was too powerful to disappear. From 2015 to 2017, Bitcoin went mainstream. Platforms like Coinbase and Binance made it easy to buy and trade. Businesses started accepting it. Meanwhile, new blockchains like Ethereum showed that crypto could go beyond money. Bitcoin became more than a currency, it became a symbol, a tool for financial freedom. In countries like Venezuela, Nigeria, and Argentina, Bitcoin was not a speculation. It was a lifeline. When local currencies collapsed, people turned to Bitcoin to protect their savings. Then came the bull run of 2017. Bitcoin soared to $20,000. It was everywhere, in headlines, on TV, and in family conversations. But behind the excitement came conflict. Developers argued about speed and scalability. The disagreement led to a split, and Bitcoin Cash was born. One side wanted faster transactions. The other insisted on preserving Bitcoin's purity and security. It was more than a technical fight. It was a clash of philosophy, speed versus principle. By 2020, Bitcoin had matured. No longer a rebellious experiment, it was a serious financial asset. Institutions joined in. Tesla, MicroStrategy, Square, all added Bitcoin to their balance sheets. Then came the pandemic. Economies froze. Governments printed trillions. And people began asking, what happens when money has no limit? Bitcoin had the answer. Its supply was capped at 21 million coins. Scarcity became its strength. By 2021, Bitcoin reached $60,000. Banks that once mocked it started offering crypto services. Wall Street, once its enemy, was now its investor. Bitcoin had gone from protest to policy. Thanks for watching. Don't forget to like and subscribe for more informative and entertaining videos like this. And also, check out our last video discussing the finances of the King of Pop, Michael Jackson. We post documentaries every Friday, so be sure to have your notifications on. See you next time.